Crash or fly? Let's check our watch list. Hello friends, how are you? Welcome to another video from Airdrop Hunters. As I mentioned last night, when we create a box following a downward trend, there's a likelihood that this movement might continue. Since there was an order block and a liquidity zone beneath, we anticipated it would move toward that area. So, it was logical for it to hit this zone, and you were informed about it beforehand. Aha. That's why we considered this zone significant, as it had liquidity support allowing for a potential rebound, which indeed happened. What's next? The tether dominance. I told you yesterday that we have positive divergence here, didn't I? This positive divergence can push the price or this parameter upwards. We're currently sitting at a crucial support level for tether dominance. If this level isn't broken decisively, a return to higher levels becomes possible. Now, in the 4-hour time frame, you can clearly see that we're observing a larger divergence here. But does this mean it can't continue its downward correction? No, it still has room to go lower, down to 15,666. This suggests the correction can proceed without invalidating the divergence. Got it? So, this potential is visible in the 4-hour time frame, and we also notice divergence in the 1-hour chart. It reversed, just as I explained in the RSI. Remember when I said that touching the lower RSI line could lead to hitting the upper line? Isn't that exactly what happened? In the 1-hour time frame, the RSI's behavior becomes evident. If it breaks below the current level, we could see continued correction. The key support and resistance levels ahead are crucial. The last significant low, along with the marked order block, remains critical. Yesterday, we saw it touch that area. Now, patience is key to determine if there's a reversal or if it forms a W pattern here. If the W pattern completes and breaks the trend line, along with the marked zone, we might expect further correction in the market. This can act as a cheat sheet. Similarly, on the 15-minute time frame, a box was broken, leading to a correction. We now need to see if it can reclaim the 98,900 level, as this box was the cause of the drop. To resume the upward movement, it must reclaim this zone. If this happens, the next targets could be the higher liquidity zones, likely around 99,697 to 100,379. Keep in mind that market volume tends to be low on Saturdays and Sundays, making it more volatile with smaller funds. Moving on to liquidity and positions, note that in the 24-hour time frame, the market appears range-bound between 98,700 and 99,400, with significant liquidity in this range. The most recent liquidity zone is near 98,857, which aligns with the marked red box. On the 1-hour time frame, we previously discussed the potential for a move up to the gray box, which has now been achieved. This box remains critical, offering strong support. Looking ahead, the key is whether we see a 1-hour candle close below 96,932, or more precisely, 96,726. A close below this range could lead to a drop to 94,000, as there's little to prevent further decline. Volume analysis indicates a lack of support in this area, making a drop likely if broken. Another important zone to watch is the POC, point of control, which adds resistance and pushes prices downward. Hence, for bullish movements, 98,900 is critical, while for bearish movements, 96,726 is the level to watch. Keep in mind that smaller ranges increase trading risks. Even altcoins with bullish structures could correct alongside Bitcoin's moves, potentially disrupting promising setups. For now, Bitcoin must move toward the 4-hour EMA 25 zone to reassess the situation. Yesterday, it reached this key area, around 96,986. Observing this level is crucial for decision-making. On higher time frames, the daily EMA 25 stands at 86,000, indicating a wide gap. These levels will eventually converge, signaling potential opportunities for long positions. For now, patience is key. When Bitcoin dominance reaches support levels, corrections in Bitcoin often lead to sharper declines in altcoins, offering entry opportunities. Conversely, during rebounds, altcoins may see sharper gains if Bitcoin stabilizes or rises slightly. To sum up, market corrections are healthy and expected. Avoid overreacting to minor dips, as the market still holds potential for upward movements. Patience is essential for navigating volatility and capitalizing on opportunities. If you want to secure profits, you could sell in increments at current levels, but I personally am holding for now. Remember, market corrections are necessary for sustained growth. Patience pays off, so don't let minor fluctuations shake your confidence. Thank you for tuning in. Keep an eye on the zones we discussed and adjust your strategy accordingly. See you in the next video.